Let's talk a little cars here with just a few minutes until the opening bell. A Chinese electric car maker Li Auto falling after announcing disappointing second quarter results and a deliveries estimate missing forecasts here. Of course, what's also important to remember in the backdrop here for any of the electric vehicle manufacturers in China is that the mandates are going to be increasing over time here too, so that they could get to this broader goal of 40% of all sales being represented by electric vehicles by 2030 in China. And so, of course, COVID-19, the pandemic, and even thereafter, some of the shockwaves with the variants, that it also impacted the ability to produce. But now, as you see more of the Li Autos of the world, the BAIC as well in China, really prioritizing their EV production push, that's where it's going to be even more of that competitive environment. And I think the big thing here on the day is Li is down because of the deliveries. The deliveries were down year over year, and even, well, not year over year, sequentially, I should say.
Yeah, and the margins too down sequentially, sales down 8.7% sequentially as well. And I would say this company is just not winning the sexy battle in the EV spaces coming out from China. You have XPeng working on flying cars that might come to fruition over the next 10 years. You have Tesla dominating the China electric vehicle market. And then you have Li Auto and NIO just floating around out there.
Well, Li only has two cars, right? The two models that are actually not two cars, two models of cars that are out right now. So that's something that maybe is holding them back versus the others. In addition to that, Li's production is more centered in the Shanghai region than some of its competitors, and that's where we have seen most of the shutdown. So their production has really been crimped by that. So that's something that has hurt it as well. So, you know, to your point that they've got this big target of how much they want to capture of the global EV market, maybe they'll get there at some point, but they're going to have to accelerate. All right, there you've got the opening bell here on this Monday morning. And Getty Images is ringing the bell. I mentioned that because we're going to be talking to the CEO a bit later in the program after that storied brand, I think we can say, came public again, returned to the public markets through a SPAC deal recently.
You know where that picture? It's getting uploaded right to Getty Images, and maybe we'll put it in our story when we write it for our site.
Yeah, probably like a dozen of those at least. And that's part of how they make their money.
That's true.
It's from people like us, organizations like ours. If we take a look at the opening bell prices this morning, we do have a little bit of a pullback in the major averages here. Retail, obviously, as we've been talking about, is going to be very important this week in terms of determining whether the rally that we have seen from the June lows does continue. There's a lot of debate right now about whether those June lows were the lows or not. We've been talking to a lot of folks about that, and there's a lot of debate on that point.